4imprint is a very interesting business. It's unlike any of the others that are quoted in the UK sector. It is, in fact, majority a US business. 97% of revenues are earned in North America, the balance 3% being in the UK and Ireland. It's a direct marketing business focused on the promotional goods sector. Now, that could be anything from pens to apparel, bags, mugs, anything you can think of that is printed with a company's name or logo in order to promote their brands. That could be something that's given out at a trade fair or used for motivating staff or any such purpose. We all have them on our desks and around us all the time. Now, this is very much a distribution business. So it's bringing the goods in from suppliers and then selling them on to a large client base. And it's a very large business as well. Over 1.3 million orders were handled in 2018. The business has a very impressive growth record. In fact, for the years from financial year 11 through to our projections financial year 20, we're talking about a compound annual growth rate of 14%, which would compare to the market, which is growing just under 5%. So you can see that that's a very consistent long-term record. And that's all been achieved organically. This is by building market share, by growing the presence within the target customer base, and by making sure that those customers are not only acquired, but retained. Now, this is really done through a complex data-driven marketing exercise, which is encompassing both digital and analog formats, everything from a catalogue, a very traditional looking thing, to complex and sophisticated SEO marketing. And it's all combined together and driven by data in order to achieve the best results from the customer, constantly tweaked in the balance of how that mix is handled through the marketing. This is a marketing and distribution business and therefore doesn't have any large requirements for cash for invest in stock or in capital equipment. And therefore the cash conversion rates are very impressive. In fact, runs over 103% on the average of the years FY11 to 17. And this is there are a number of uses for the cash, and there will be investment. There has been investment. Last year was a major investment phase for additional marketing to drive brand awareness amongst the target market, which took some people by surprise because that involved more traditional TV and radio marketing, which she achieved better results than had been originally been anticipating, and it will likely form part of the mix on an ongoing basis. For 19, it looks the company have now confirmed that they will be expanding their facilities in Oshkosh in Wisconsin, where they're based, just in terms of keeping up with the scale of the growth of the operation. The last investment phase was due to last for 5 years, but the pace of growth of the company has meant that has been concatenated, that timetable, and the next phase of investment, $5 million, is going ahead in 19. So the cash is required for the business, but there is also cash being generated that's surplus to the requirement business, and the company has a generous progressive dividend policy. And when the cash on the balance sheet accumulates to a greater degree than is comfortable, then the company has proved that they are willing to pay out supplementary dividends as they did in 17.